Hello, welcome back to Laptop Trader channel on YouTube. My name is Philip and I'll be hosting this presentation. I'm here to share my trading experiences and give back to the stock trading community one video at a time. This channel is mainly for new or recovering traders, but all are welcome. Our monthly videos cover the markets, stocks, ETFs, stages, technicals, fundamentals, market cycles, trade risk, trade entry, trade management, trade exits, and how to create confidence by putting the odds in your favor. I believe in being my own trader and investor and not leaving this up to others to do it for me. If you have questions or comments, my email contact is laptoptraderphil@gmail.com. This video is for information only and should not be considered investing advice. Caution, trade at your own risk. Most stock traders lose money. Please protect yourself at all times. Any stock suggestions are up to you to decide if that is appropriate for you. Good luck and God bless. We always say here, start now by educating yourself on how the markets work and finding out what is right for you. Invest in yourself and then invest in the markets. Our monthly agenda for October is we'll just have our normal general market discussion, including our 5 indexes we watch and our 11 major sectors. Then do you have enough information to formulate a trading plan for yourself? Why small losses and larger wins matter. Applying my plan to the market. Does my plan put the odds in my favor? And then we'll have a topic of time frames and day trading versus swing trading versus position trading. There's also 3 specific bars or candles that I look for on any chart and any time frame. Then we'll have a few trade discussions or trade suggestions of Grab, Celsius, and Robinhood. And do they fit within your trading plan? What are the comparisons to the overall market, and what are the emotions in these charts? What is supply and demand suggesting? And what do I do if I missed my trade entry opportunity? So that's just kind of stuff we'll go over this month. Hopefully you guys find some value in this channel and share it with others who may be a new trader or somebody that's struggling to succeed in trading. So let's cover the markets. Here is a chart of Bitcoin. As you can see, it had this is a monthly chart, so it kind of had this pullback here. Then along with the market in April, it popped up, went sideways, and just made a new high here this month in October. So that looks bullish overall for Bitcoin. Similar picture to the S&P 500 is still in an uptrend. Just made a new high again this month so far in October. I would say the chart is a little bit extended as it's up, about 5 months. So it wouldn't surprise me if there was some sort of a pullback. But sometimes markets do funny things. Sometimes they just keep going higher, regardless if they're extended. But I would just use a little bit of caution at this time overall. Okay. Basically the same picture in the NASDAQ market as, again, that's making new highs here in October. Another note on these markets is we did not see any sort of a real sell-off in September. So, again, I would expect some sort of selling just based on the fact that the markets are up so high. How does that mean it's going to tank? No, it just means expect some sort of a pullback, okay? Also a new high in the industrial sector, the Dow Jones Industrial Index. So again, still a bullish picture in the industrial index. The small caps have also just put in a new high on a monthly basis. The difference between this market, which is a much broader index of over 2,000 stocks is that this, ripped out of April. But on this chart, there was a lot of resistance to the left from previous years. You could just see this topping pattern here. We had the sell-off, into April. And this one is recovered basically from the bottom to the top. This one is much more likely to experience a pullback too. It's because even though it's over resistance, there was a lot to get through for this index to make that new high. And so this is actually up more than 4 or 5 months. This is up like 6-7 months. So again, just use caution in any new trade you take. The market environment may, not will, but may change here over the next month. Then we have the transportation index as measured by the IYT ETF. This is a much more sideways, range-bound, back and forth market. And I would also expect this to possibly pull back here too, as this came up from the bottom, did not make a new high, put in this topping tail bar, and then you can see the momentum just slowing, where you had a wide bar and a narrow bar, and now this kind of almost an inside bar here. So the market is just kind of slowing down a little bit here, especially in the transports, which would be the weakest, in my opinion, of the our major indexes that we watch. Then we've got the volatility index, which is just kind of like this big gauge of fear in the market. Right now, there is not a bunch of fear in the market. It's a level of 16.65. That's pretty normal towards the lower end of the spectrum there. So there's definitely not a lot of volatility in the market at this point. However, if we were to get some sort of pullback or some sort of sell-off or a major news event, for example, that could cause this index to spike, and it could cause markets to roll over. So again, we have a news-driven market. We've got political stuff, economic news. Anything could really drive this market either way. But right now, things are still bullish. Okay. Now let's take a look at some of our major sectors. So there's 11 major sectors, and then of course you've got Bitcoin in there too. So we've already commented on that. But here, if we look to the left, we had this previous pivot high on a monthly basis. We had this pivot low on a monthly basis, and then the market started to recover. And again, this, just like the other markets, pulled back from the end of last year into April and then went up. Now this sector made a new high last month. Looks like it's kind of trading inside of that high this month. So this still looks bullish overall in consumer discretionary, which is probably a good sign for the overall economy, but things can change. So right now, for the time being, consumer discretionary does look bullish, but with caution. Healthcare, which has been relatively weak over the past year, has made this turn up over the past 3 months. It looks positive. It looks bullish. We definitely have some volume coming in this market. And if this could get over this area, that could easily come up here and test these highs over the next several months, maybe 3 to 6 months. So healthcare actually looks like it's making a little bit of a recovery here. And therefore, any stocks within healthcare may be up for investment. If there's something in that sector that shows strength or promise, or something that about, maybe healthcare could be a possible area to consider. Even though it's not making new highs, it does look like it's made a nice recovery off of the bottom. The utilities sector making new highs. So this has been another very bullish area of the market since this year and since April. And so that, for the time being, still looks quite bullish in utilities. I'm not sure if that's being pushed by nuclear utilities or coal or gas or what's pushing that, but definitely making new highs in the utilities sector, which is not normally considered a big growth area, but there appears to be some opportunities within that sector at this time. Then we've got real estate, one of the more interesting charts to me, based on my plan, where I like to buy these areas of low volatility versus buying something over here where there's a high volatility and a high chance of being stopped out. I like this, where we've got this bottoming tail, And then we've got these inside bars, or these smaller range bars, especially right now, where this could actually go either way, right? It could move up in a big way, or it can move down in a big way. It's just in between right now. It's a tight bar, but tight bars and low volatility equals low risk. So this looks positive for real estate, especially if it can start moving up. That's definitely on my radar after looking at this chart. Then we've got consumer staples, which has been recently probably the worst area of the market to be in, because it's been selling off as the market has been going up. So staples look pretty good this year. It was kind of consolidating up here near the highs. It made a new high back last year, and then just sold off, came up, sold off, left the bottoming tail, and then it put in this nice wide range green bar, and then it just never went higher. And so this is an area to avoid at this time, consumer staples, unless, again, if maybe you know a company or work at a company that has some positive economic outlooks for their company or is outperforming the sector, then at this time, I would just avoid consumer staples altogether. It's just an area that's not performing versus the overall market. So there's better opportunities. That's the bottom line. Technology. Technology is a place you always want to be looking for opportunity, because as technology changes, new companies come in and dominate these new industries that were never even there before, such as something like rideshare or AI or whatever. And that's where you make your money, is in technology and these new industries. But this has just been on a straight up uptrend since April. New highs this month, new highs last month. And so this is just an area that if you're in this area, it's extended, but I would say it's an area to hold. There's probably going to be some more growth out of that area in the future. Again, it could pull back too if we experience some sort of news or a market pullback. But technology is the place to be looking for opportunities. The industrial sector is very closely related to the Dow Jones index and that overall industrial index. But this is looking like we've got some slowing momentum in this sector. We had some momentum moving up, and then you could see the past couple months it's just kind of going sideways. Just made a new high this week and this month, but that is probably going to experience either, at the very least, a consolidation, maybe a pullback, but it's still in an uptrend. So the industrial sectors, I would just proceed with caution there. Watch your position sizes there. Financials also look very good. Still bullish, still in an uptrend. Kind of consolidating here the last couple months. New high last month. Kind of nice tight bar this month. This looks like an opportunity to me where we get a tight formation here over the next month or two. Watch for that next leg higher. So financials looks like a place that there could be some opportunity there in financials going forward. Energy does not look as good right now. It just looks like a big flat sideways market. I don't like this large red bar here, and I don't like this large wide range candle here, this red candle. This looks like this could roll over and maybe even start making new lows in energy. So I would kind of watch out for that. Or if you have holdings in energy, I'd watch very carefully if you see any sort of sell-off in your holdings or in your positions in energy. That does not look very good right now. Communications. This is the place, also a growth area of the market. This is the place everybody should have been for the last 2-3 years, because this has been almost straight up, other than this move here this year down, but it resumed this uptrend. So communications has also been the place to be. I think of big communications companies like maybe T-Mobile, which had a great year, Google, and other communications companies. So that is a great sector to be in still. The materials sector, not so much. Very, very weak sector. It did have this bounce up since April, but has not really followed through. So that's an area I would either avoid or use a lot more caution when it comes to anything in the materials sector. So even though industrials have been doing really good, materials not so much. All right, so that covers our quick sector analysis for the month. It's up to you to look for opportunities in those areas for yourself. Now, Next topic, a note on day trading. Recently, on a national radio show, a caller identified himself as a day trader. His story was one of heartache and he borrowed money to trade. Big mistake. Do not borrow money to trade. He also initially showed a profit of over $100,000, but gave it all back through continued trading. He blew up his account and still owes his creditors the money that he borrowed. His comment to the host was he felt hopeless and felt like a loser. Okay? Please, please, do not let this be you. Use some common sense. Don't trade with borrowed money and ask yourself, would you open a restaurant or a bar if you had no experience operating a restaurant or a bar? Right? If you have no experience trading or day trading, should you enter trading or day trading with no experience and no money? I don't think so. It is quite dangerous to your well-being. Imagine being the trader in this next chart of a biotech stock that drops 89% in one day. Now, if you use some risk management and position sizing, you may be okay. But if you do not watch your risk, you're done. An 89% loss is simply unrecoverable, and you cannot trade your way out of this. Okay, look at that chart. That happened in one day. That's a chart that was making new highs, had some bottoming tail candles towards the top of a range, and then the next day it opens up and closes down 89%. Even though this is a weekly chart, the daily chart, this happened in one day. See, when I say please protect yourself at all times, I really do mean it. All right, enough of a lesson on biotechs and day trading. Let's get to some better, more positive topics. So, do you have enough information to even formulate your plan? You're going to need some amount of data to formulate a trading plan, just as if you were going into any other business. You may study the market, how much capital is required for that business, what is the profit potential for that business, etc. In trading, it's a little bit different because the market is already there. It is not really a new business. You are simply joining the game, but you need to know the rules of the game. It is specific to you as to how much you can allocate towards your plan and your new business. Your experience level matters just as if you open a new restaurant. Are you an experienced operator or not? If not, how am I going to gain some experience, right? Well, in stock trading, there are basically two ways to gain some experience: mental reps and actual trades. We can take as many paper trades or mental reps as we wish, and we can look at as many charts and fundamental information as we wish to also. This can be overwhelming at first, especially if you are new or you lack confidence or you just simply don't know what you're trying to look for. Okay? So do you have enough information to formulate your plan? That's a big question I would have if I was a new trader. What can we do to build up our plan and our confidence? Okay, so last month's topic was on all about confidence. If you didn't see that, I think that was one of my better videos. So check it out. I would suggest after you have taken hundreds of mental reps to start trading small. I mean really small, like $10 or $20 per trade small. Take 100 trades, track them, analyze your progress and the information you have for your situation. Then, reassess if this is something you even wish to pursue further. It may not be for you, we don't know. But please don't go out and just start gambling in the markets. It's not worth it, guys. Use position size as a percent of our account size, right? Maybe somewhere between 1 to 10% of your account size is just a suggestion. I personally don't use more than 10% in any trade as far as a position size. And then use share sizing by using a stop loss to further reduce our risk to, for example, maybe $10. Okay? If you follow those two rules, it'll be very hard for you to blow up your account. And then we take our losses, and when we get a nice win, let's say over 25%, we can sell all or half of that position and let the other go let the other half go for like what I call a free ride, right? So we can take some money, so we can take some profits off the table, and then we can see just how high that stock may go, because we simply don't know. These wins will add up and our losses remain small. Okay, so if we keep our losses small, we try to hang on to our wins, and we use position size, and we use share size, we can start to build some confidence. Why small losses matter, right? Why does it even matter? Well, we can take many trades with small losses, and we can even have lose 9 out of 10 and still make money, believe it or not. So if we took a small loss, right? Let's say we took a 1% loss times 9 trades. That means we would be down 9%. Now, if we had a 10% win one time, we'd be plus 10% overall, plus overall we would be up 1% on our account value. So we could take nine losses in a row if we only lost 1%, and we could have a 10% win, and we could still have an overall winning, we would still be considered a winning trader at that point. So small losses matter, right? As we get better over time at identifying opportunities, and with the right market environment, we should improve our performance. So let's say we increased our losses, and this time we lost 2% for 6 trades. So now that means we would be down 12%. And then we had some 5% wins over 3 trades. That means we would be up 15%, right? So 15 minus 12, we would still be up 3% in that scenario. If we had one 20% win, okay, combined with these 2 previous trades, overall, we would be up 23% in our account value. So by keeping those losses small, right, we got some small wins there too. We got some 5% wins, and that kind of kept us just slightly profitable. And then we had one nice winner. We're up 23% in our account. And that's what professional traders do. They keep their losses small. A lot of their wins will just be these singles and doubles. They won't be home runs. And even a 20% win, in my opinion, for me, is more of a single or a double, really. I mean, I'm looking for 100% on my big ones. But still, we're progressing. We're moving forward. We're not moving backwards. We're up 23% in our account by holding these losses small. And that's something that's hard to get used to. You're going to have losses. You have to get used to losing and trading. But if you allow your losses to multiply, okay, then the reverse would be true. It would negatively affect your account performance on the loss side. So instead of being up 23% in this scenario, imagine you're down 10%, right? It's a huge swing in confidence, psychology, and just how you feel. So now, applying my plan to the market, right? If my plan works in an uptrending bull market, then that is when I should be trading or speculating. I should not be trading, or I should be reducing my exposure in a bear market like in 2022. If my plan is to speculate on appreciating stocks, right? So the plan isn't going to work if we're trying to buy low and sell high if we're in a down market. It's just not going to work. So we need to match our plan to the current market environment, which in my opinion is still quite bullish. Then, when we see the environment is good, we can then look for opportunities where the odds are in our favor, okay, but not guaranteed. So we need to protect ourselves at all times. If you wish to day trade or short stocks or trade options, then you would look for an environment where the odds are in your favor for those strategies or techniques, right? So we need to formulate a plan that matches the market environment, right? Does my plan at this time in this environment put the odds in my favor, right? If that's a no, and things just aren't going well for you, then you need to take a step back, maybe even stop trading, and reassess what you're trying to do, and reassess what you're trying to accomplish. Okay, otherwise you're just not going to meet your goals. So that's important. Now let's talk about applying different chart time frames to my plan, right? So in using technical analysis by using price charts, we need to decide what time frame is right for me, right? My situation is one that not only do I not want to day trade, I don't have time to day trade. I don't have the time to commit to it, so I'm not going to day trade. Your situation may be different, but for example, if I am a swing trader, then I would likely use a daily chart as my action time frame, and I would also consult maybe a weekly chart to check the overall trend. Okay. For me personally, as a position trader, I use monthly, weekly, and daily charts to make my decisions, and I'll show you guys some of that later. If I were a day trader, I may use a 15-minute chart and a daily or an hourly chart to make my decisions. So let's look at an example. Okay. Let's also discuss this quickly. These are 3 specific candles that I look for on any time frame chart. These are action candles in my view to pay attention to, right? So here on the left, this would be, if you're reading this properly, this candle here on the left opened here and closed here. Therefore, it's red. The next candle gapped down and reversed, but didn't close higher than this candle. Okay, and then the very next candle gaps down in a big way and reversed in a big way. That's called a gap down reversal. Okay, when price closes here, gaps down and reverses higher, right? So it would close here the next day or next time frame, whatever that is. It would gap down, open here, and close here. That's a gap down reversal. That's one specific candle that I look for all the time. It's a huge psychological thing where it basically stops out a lot of people, and there's a lot of money left on the table, and then the big money comes in and takes all that money out of these guys' hands over here. But it's a psychological thing. It's very powerful. Then we have here in the middle an igniting or an engulfing closing candle over some sort of base. This can be in any time frame, and you've got, if you look across the top of these candles, this would just be like a base. All these candles are about the same size. They're kind of, the lows and the highs are about the same, and then this very next candle comes in and kind of ignites in a big way. It's a much larger candle than the previous candles, and it closes over all this. So that means anybody that was over here that was short is now holding a loss. And one of the reasons why these candles get that large is because the short sellers had to buy to close, pushing price even higher. Okay, again, another psychological, emotional type of a candle. And then finally, if you get a sequence of candles, something like this, and then you get this bottoming tail candle, very similar in psychology to this gap down reversal candle. Okay, I don't know why that keeps doing that, but the bottoming tail candle is also a very emotional candle, because in this case, price would have opened here at the top of this red candle. Oh, that's really making me mad. That's doing that. Right, price opened here, closed here on this red candle. Next day it gaps up, right? So everybody in the market is thinking, ooh, this is bullish, this is positive. And then throughout the day or whatever time frame you're on, price started to retrace lower and lower and lower. And then buyers stepped up at some point and pushed it all the way back up, probably stopping out a lot of people in the process. So this is another emotional candle. If you see any of these 3 candles on any chart, I think that's something to pay attention to. So that's that's definitely something I look for all the time. Now let's get to this example. And here is a chart of Ryder System. Okay, major company. It doesn't trade a huge amount of volume, but it's an old established company, so it's definitely has some liquidity to it. So I'm not worried about that. But this is a monthly 5-year chart. So just quickly, if you look at this chart quickly in 3 seconds, we can all see this chart on a monthly basis is still in an uptrend, right? And we can see that this candle was a decent size. This was a little bit larger candle, then this one was a little bit smaller but made a new high. The next candle was a much smaller candle but traded towards in the top, let's say third of this candle, maybe even making a new high there. And then this month it just made another new high. So this is a very strong stock in a major uptrend. Okay, that's all we're looking at there on this monthly chart. So would I trade this now? No, I would not. For my plan, it seems a little bit extended to the upside. But there's no question it's still an uptrend, okay? Now, weekly. On this weekly chart, we basically get the same picture, but now we're getting a little more information week by week, right? One week it's red, next week it's, one week it's green, next week it's red, then it's green, Then we kind of make a new high here, and then it goes sideways for 4 or 5 weeks, and then makes another high. Actually kind of gaps up and makes a new high. So that looks bullish, right, on this weekly chart. So to me, the weekly chart actually looks better than this monthly chart. Now, even though the monthly chart is extended, this chart looks pretty good as far as bullish trading opportunity. But let's continue on. Let's go down to the next time frame and see what we can look at there. So this is a daily chart of the same company. And again, we have this nice base in here where it's just back and forth over weeks. And now at this point, we kind of get this a little bit of a 3-bar turn here and then sideways for 1, 2 days. And then this bar right here kind of, it actually gaps down a little bit at the open, then closes higher over everything else in the past. So to me, this is a much better entry here on this day versus trying to enter on like on the monthly chart. And then the next day it leaves a bottoming tail. And the next day we make a new high. So right here on this day here, if you bought over this high, you probably would have had a nice, $6, $7, $8 gain over these 3 days. So that, to me, that would have been a pretty decent swing trading opportunity there. But right now, again, it's still a little bit extended. So I don't see a great opportunity there now. But I'm just trying to point out the fact that where would I enter on this chart? Well, I would have entered probably, one of these days right in here if I was going to take that trade, because that looked more positive versus after all these red bars. Then we started getting some buying taking place over here. So that's kind of what I would be looking at on that chart as far as a swing trading opportunity. Now, from a day trading perspective, this is a 15-minute chart. So this is intraday chart. Right, so this is a chart that if the other time frames are in some sort of alignment, right, things are still going up. And let's say I'm looking to buy for price appreciation, where on this chart would be a good opportunity? Well, on this chart, if we just start looking from left to right, we can see a pivot here, this low pivot. We can see one of my one of the bars I definitely look for. Right here's the gap down reversal bar, this big wide range bar. That to me is a big signal. I wouldn't necessarily take action on that bar because it's still pretty flat here, and I would have waited. And then these next couple days, it just kind of retraces, and then let's see, this would be 15, 30, 40. An hour later, it puts in this bottoming tail bar on volume. Now, in my mind, after this gap down reversal bar to open the day, and then we get this bottoming tail bar on volume, to me, that's a big clue, right? That's like, okay, let's get ready. And sure enough, we get over the next 30, 45 minutes, we actually get this higher low right here. And then it goes sideways. So for me, if I was going to day trade this, I probably would have entered somewhere, either this bar or the very next bar where it kind of goes over the rest. In fact, I think that's probably where I would have entered right there. Put my stop under here somewhere, maybe low of day even, maybe under this bar, even low of day, and see what happens. And what happens next is over the next hour and a half, we get a retracement, right? And then we get another igniting bar, a gap up reversal down, So that'd be kind of scary. And then we get this inside bar, and then in the afternoon it just kind of drifts higher. It actually gaps up and goes. So this is a day trade that you really would have had to kind of watch and pick your points on this chart. I'm not saying this would be necessarily a stock I would trade as a day trader, but it does have some nice daily volume range. It does seem to be moving. It does have enough volume, I think, to trade. But I'm just pointing out some of the areas where I may consider entering this as a day trade, even though I don't. And then, between these lines, this would be another day's worth of activity. The next day, it doesn't really do much. And then on this day here, you really get a sell-off. So as a day trader, you have to be thinking about what time are you entering? Where are the best opportunities to enter? Does that even line up with my schedule? So for somebody trading the first thing in the morning, this may not have been a great opportunity, because for the first hour and a half, not much happened with this stock. So this may not have even been on their list. But this is just an example. And then later on in the chart, we get a much better opportunity. Not so much as a day trader, but right here where this just kind of starts moving up and kind of starts leveling up. We get this nice tight pullback right here. This happened around 3 in the afternoon Eastern, and then it just kind of rips. So when you see that, maybe next day you could take that opportunity on that opening gap up. Could have been a decent day trading opportunity in the stock, because that went from give or take 191. In that day, it ended up like at 193, maybe 194. So that could have been a $2 to $3 gain, for a day trader. And then since then, it's just been kind of pulling back. So there is opportunity. I just want to point this out to you guys, that there is opportunities in any time frame when you're looking for those opportunities, and you have the ability to just break down a chart and look for some sort of advantage or some sort of high probability trading opportunity. So enough of day trading stuff, because that's not really what I do, but I just want to discuss that with you guys. Now let's get to some real opportunities. This is an opportunity that I did take in full disclosure. Grab holdings. I did take a position this week on, I think it was Thursday. So we can see here we had an IPO, big sell-off after the IPO, which is probably most IPOs do that. Sells off, makes all-time low, right? Then it just starts drifting higher, going sideways, not much going on there. And then we get kind of an igniting bar, and then the next bar is a little bit smaller, but it's overall this. And then we get another igniting bar in earnings. So this little sequence of events right here got my attention. This is what got Grab company put on, at least onto my watch list. I didn't take any action here. I just started watching. And then we had this consolidation over the next, I think it was about 10 months. And what do we see? We see earnings, not much happens. Next month we've got a bottoming tail red bar. Next month we have earnings again and a bottoming tail green bar. And then we have 4 nice months, 4 tight months, really tight base right here over 4 months. And then we get this igniting bar, right, over everything else in the past except for these first 3 bars. So for me, that's good enough. We don't need to get all the way back up here towards the highs, because we have this huge void in here of price. It's just a price void where prices have an area to move up into where there's not going to be much resistance. But the combination between this sequence of events, this bottoming tail bar, this tight consolidation over 4 months, or this base, then this igniting bar, even though it has a little bit of a topping tail, I'm okay with that. On volume, big volume, 56 million volume. And then we get this next month right here, this inside bar. This is where I chose to enter, because I've got a nice low risk reward, and I've got this opportunity for this to probably move up somewhere between 100% plus, right? It's at 616 closing this week. The next major line on this chart is $10, so that's looking at about a 50-60% move there. So this has some opportunity, in my opinion. and that's why I entered grab this month. Based on this chart, here's the weekly chart where I entered. I believe I entered right here. Right, yeah, we've been right around somewhere in this area. Because this was kind of an inside bar, and then I entered here. Daily, oh, here it is. Here's where it is. I'm sorry, that was the wrong chart. Daily, I entered right here, over this area, over this bar. So this closed here, gaps up the next day. I get it involved here. I'm already up just like a couple percent. Not a lot, but that's a start. So that's how I looked at that chart, right? I went monthly, weekly. Again, another thing to consider on this chart is this area right here. Here's a pivot, here's a pivot, here's another pivot. If we draw a line across those three pivots, we get about the same area as this candle right here. And that's kind of where I entered, right? At the bottom of that candle, whatever that price was. I think it was $5.98 or something. And then, so I kind of caught the bottom of that tail on grab holdings. Okay, so daily looks pretty good too. So that's why I got involved in grab. So that's full disclosure, that's an open trade for me, fairly new trade. Next one, Celsius. Is this an opportunity to take a look at? Well, we can take a look at just a general chart pattern on here, and we'll discuss it, right? So this is a 2-year weekly chart. We've got a sideways trend to the left, then it goes into this very strong stage 2, and then we make this M top, right? M top is where you make a high, you pull back significantly, almost make a new high, and sometimes you will make a new high, and then you get a big, wide range red, like an igniting bar to the downside, and that creates that M pattern. I just think of the letter M, and then it just sells off, goes into stage 4, comes across into stage 1. Then we get an igniting bar on volume on an earnings event. So that's something to pay attention to, right? Not necessarily enter, but pay attention, right? Something's changed here. We had all these candles that are about the same size. They're going sideways. All of a sudden we get this igniting bar. What's that about, right? So that should spark you to start asking some questions. Then we start moving up just a little bit, get a higher low, higher low. So this is looking positive from this point forward. So then I chose to enter somewhere in this area, right? And I got stopped out somewhere up in this area. Well, now this is looking like this is a possible re-entry opportunity in Celsius Holdings. And Celsius is like a drink company, beverage company, but it looks like it gapped up this week, closed up. I kind of like that right there. It's at a key moving average. So Celsius to me looks like a potential opportunity going forward. Now, what is that opportunity? Well, right now it closed this week at 58.70. Some other major areas on the chart would be here around maybe 70 and 80. And if we look towards the top of this chart, maybe $100. So this has a potential nice opportunity. I'm not looking for 5 or 10%. I'm looking for 40, 50, 100% on my trades. And that's why I like this chart, because it has that potential. Let's see. Here would be the daily chart of Celsius. Now this chart to me doesn't look so great, right? It's kind of gapped up on earnings, which was positive, and then it went up for 8 or 10 days. Then it pulled back. Then it made a new high. That looked okay, but then it just kind of started selling off. And here in this last week, it's had a nice week. It kind of came up. I would say if I was going to enter Celsius, I would probably enter over Friday's high, whatever that was. It probably was, according to this. So I would look to enter Celsius maybe over 60.8 or maybe even over 61 and see if we could catch that next move higher, if there is going to be one. But the daily chart does not look super positive. It's kind of more back and forth and really kind of sitting real tight by the moving averages. But anyway, that's an idea going forward. Robinhood. Let's discuss this chart. What do you guys think about Robinhood as far as a monthly chart goes? Well, right now it's clearly extended to the upside, right? It's really, I mean, it's up there big time on a monthly basis. But I do want to discuss something interesting about Robinhood, right? So here was the IPO back in 2021, came up, had a big range, then it sold off like most IPOs do. Then it went into a stage one base for, um, almost over 2 years. And we started to get some more volume increases. We had some more price. We had some price increases. We had a bottoming tail here, another fairly small bar, topping tail bar. Then we had this igniting bar, right? Again, that's something I look for. Then we had to move up. We had this nice pullback into a moving average. And the very next week or month, we have this gap up and another igniting bar. So this was a great area to consider getting involved in. It kind of matches over here where we had this IPO price action, kind of matches that bar. So that would have been a great entry on Robinhood, somewhere around the $54, $55 area. Okay. And today it's at 148. So that's the kind of opportunity that I'm looking for. I'm looking for something to go from 40, 50 bucks to 150 bucks. Awesome opportunity in Robinhood. Now, if you missed this, if you had never seen a chart before, if you never watched the news, my question to you is one, had you heard of Robinhood before, right? Either through news media or just through other people you may know that have been trading and were showing you their stock portfolios on Robinhood, right? It's got a really nice app. It's some new technology. You can trade with it on your phone. How many of you guys, not even thinking about it, knew about Robinhood? And could you have not maybe done some homework, right? Was this a public company? What was the growth opportunities in Robinhood? Were they making money? Did Robinhood have some sort of forward projected growth story? And so even if you are new to stock trading or new to investing, I want you guys to start thinking at least about some common sense things that you can use. What are some companies around you that are new and exciting? What are some companies that are new that have new technologies? Just start thinking about that. Start looking around, paying attention to what's going on around you. This could have been a great opportunity for anybody, right? It had an IPO of, I don't know what it was, about 40 bucks at the time, and then it went down into the, maybe the 10, 12, $15 area, and then today it's $148 a share. What an awesome opportunity. Even if you didn't have a bunch of money, it still could have been an awesome opportunity in Robinhood. And I think that opportunity is still there. It's just not as great as it once was, okay? And full disclosure, I do own some Robinhood stock. So I'm not saying buy this now. I just want you guys to, sometimes we don't always think common sense. We're thinking charts, we're thinking fundamentals, we're thinking earnings, we're thinking whatever's on the news. Instead of just using our common sense, this was a new company, this is a new opportunity in an old industry, but with new technology. So very interesting story on Robinhood. On the weekly chart, we have, right in here, I think was a decent opportunity to get involved. We had this move up over a period of whatever it was, 12, 20 weeks, whatever it is. Then it went sideways, pulled back, and then gapped up. I believe this is where I got involved. I bought this gap up, and I'm up pretty good amount in Robinhood, probably over $20 a share. So, these opportunities exist, even in stocks making all-time highs. But right now, it's really extended. I would not suggest doing much now with Robinhood. I'd say it's a watch and wait. Daily, the chart doesn't look too bad, but it's just kind of drifting higher and just made a new high on Friday. So there was a good opportunity for you guys to get involved in something that was either known to you or something that maybe you recognize on a chart, or maybe you're paying attention to the fundamentals, okay? And here again, from a day trading perspective, here may, was there an opportunity on this 15-minute chart to trade Robinhood this past week? And, I think there could have been one here, maybe this gap up back on Monday or whatever it was. That looked like a decent opportunity. This doesn't look like a great opportunity here. Maybe the next day here, this would have been maybe Thursday, gap up, pulls back, moves up, pulls back, and then just kind of drifts higher the rest of the day. I don't know. I don't think I would have traded Robinhood. I don't see necessarily a huge opportunity per the way I trade. But, sometimes different trading plans operate differently. I'd be looking more for, first of all, something that's not extended on these longer term charts. That's the first thing I'd be looking for. If I was going to day trade this, it would have been back here on this gap up, not on this bar making new highs. Anyway, enough of that. Let's talk about now, what if I missed my opportunity? Right? Let's say I saw something on a chart or I had some sort of knowledge of a company that I recognize, but I didn't take it and now I missed it. Now what do I do? Well, the short answer is let it go and wait for the next opportunity, right? Just if something's been here, it was an opportunity and now it's kind of past that time, just let it go and look for another one, okay? It may be a different stock or it may even be the same stock, but wait for the right time per your plan. Use some common sense, okay? So I have stocks I miss all the time, and I just put them back on my list. I say, okay, I missed it. Let's put it back on the list. Let's see if something else happens, okay? But you need to put the odds in your favor and not in the favor of the market taking your money. Very important. So would I take Robinhood as a swing trade at this time? No, I really would not. It's just extended up in multiple time frames, and I simply do not care what anyone else thinks or what the TV says or what some analyst thinks or suggests, okay? I trade my plan, right? Say that to yourself. Say it out loud to yourself every day. I trade my plan. You have to stick to your plan. It's very important. And then this is just a quick statement about my trading plan. I think you guys should probably, if you're going to be serious, should probably put together some sort of statement, 1 or 2 sentence max, of what you're trying to accomplish, right? So my goal is to seek account growth through stock position opportunities and capital appreciation. I look for opportunities out of a stage 1 or 2 base pattern with the clues leading to the likelihood or the probability of a continued or igniting move higher to a new or continued uptrend. My primary entry point is anticipating a break above a base or a break above a base to new highs or a move into an uptrend, right? I trade my plan. That's it. Again, that's the end of this month's video. Again, caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. Please seek qualified help if you need help investing. Again, my contact is laptoptraderphil@gmail.com, and we'll see you next month. Goodbye.